How the Crypto World Was Shaken by Sam Bankman-Fried's FTX scam. Sam Bankman-Fried was one of the names that rose or fell fastest in the wild world of Bitcoin. SBF turned FTX into one of the most respected and well-liked cryptocurrency exchanges in the world after being hailed as a bright billionaire and the cryptocurrency equivalent of the golden child. Beneath the glitzy facade and media attention, however, was a web of deceit, reckless bad management, and downright fraud. When it all collapsed, the cryptocurrency industry was shook to its core, billions were squandered, and lives were lost. What was going on in the background, really? How did one man's empire of falsehoods cause a multi-billion-dollar platform to fail, eroding global trust in digital finance? Let's look at FTX's dramatic rise and fall. 1. The rise of a crypto prodigy. Sam Bankman-Fried was a wunderkind who exploded into the cryptocurrency industry. He was a former Wall Street trader and a bright MIT graduate with a quirky personality and a benevolent bent. He founded the quantitative trading firm Alameda Research in 2017 with a focus on cryptocurrency market arbitrage potential. But his 2019 cryptocurrency exchange, FTX, was what really made him famous. FTX's advanced trading features, user-friendly interface, and solid reputation attracted millions of users and billions of dollars in trading activity. As the altruistic billionaire, Bankman-Fried pledged to donate a significant amount of his fortune to charitable organizations. His outspoken anti-establishment attitude only heightened media attention, leading to notable partnerships like the naming rights to the Miami Heat's arena and well-known endorsements from Tom Brady. He was even invited to speak at significant conferences and testified before Congress. FTX was valued at $32 billion by the middle of 2022, and Sam Bankman-Fried was considered one of the most significant figures in the financial sector. The globe would soon be rocked by the much darker story that was unfolding behind all the glitz and excitement. 2. The unspoken bond that underpinned a massive deceit. The strong connections between FTX and Alameda Research were not well known to the general public. Despite claiming independence, Alameda has unrestricted access to FTX client funds. A significant portion of the funds that customers had placed on the exchange had been secretly moved to Alameda, where it was used for both compensatory and very hazardous activities. This behavior effectively turned FTX into a piggy bank for Alameda's gambling, even though the companies kept up a public image of independence and compliance. The scam was made possible by a combination of poor internal controls, a lack of transparency, and a cautiously preserved trust in SBF's leadership. To maintain the image of wealth and stability, FTX and Alameda mostly rely on the exchange's proprietary digital currency, FTT. By inflating the value of this cryptocurrency and using it as collateral, the firms created the appearance that they were solvent, but they were everything but. It was a dangerous game of leverage, deception, and circular money. As long as no one asked too many questions, the strategy was effective. But like any House of Cards edifice, it could only support so much before collapsing under its own weight. 3. The collapse shocked the crypto community. In November 2022, it was made public. The coin that FTX itself issued, FTT, was a significant part of Alameda's financial sheet, per a CoinDesk study. This instantly raised concerns about the financial health of both businesses. Changpeng Zhao, the CEO of Binance, and an early investor in FTX, officially announced that Binance would sell off its FTT holdings, citing concerns regarding transparency. This led to widespread panic among FTX users and investors. Within days, customers began taking out enormous amounts of money, which led to a modern-day bank run at the exchange. When FTX failed to process withdrawal requests totaling billions of dollars, it exposed its lack of liquidity. In an effort to salvage the business, SBF reached out to Binance with a proposal for a bailout. Binance initially agreed to purchase FTX, but after examining the business's financials, it retracted its offer, citing a sizable hole in the balance sheet and possible legal problems. Everything fell apart in an instant. On November 11, 2022, FTX filed bankruptcy after freezing customer withdrawals. The once heralded golden boy of cryptocurrencies was at the center of one of the most catastrophic financial collapses in history. The abruptly vanished billions. As investigators began to analyze the FTX crash, the scope of the deception became horrifyingly clear. Over $8 billion worth of customer assets were either stolen or lost. A large portion of these funds had been moved to Alameda and either wasted in fruitless trading operations or utilized to compensate for previous shortfalls. There was no board oversight, no proper accounting system, and customer funds were not kept separate from business assets. In his career, John J. Ray III, the new CEO tasked with overseeing the bankruptcy proceedings and most famous for his role in the Enron crisis, said he had never seen such a complete failure of corporate controls. Thousands of individual investors lost their money. Venture capital firms, including industry giants like Sequoia and SoftBank, had to write down investments totaling hundreds of millions of dollars. The ramifications extended farther, affecting pension funds and institutions that had provided funding to FTX. Both financial and psychological harm resulted. The crypto community, already plagued by mistrust, saw its deepest fears confirmed. Trust had been shattered, and the validity of the industry itself was now under question. 5. Sam Bankman-Fried's decline and legal consequences. After the collapse, the court case moved swiftly forward. U.S. regulators, including the Department of Justice, SEC, and CFTC, began looking into FTX and ALAMEDA. On December 12, 2022, Sam Bankman-Fried was arrested in the Bahamas and later deported to the U.S. He was charged with a number of federal offenses, such as money laundering, wire fraud, securities fraud, and violations of campaign fundraising laws. SBF and his closest associates were presented by the prosecution as the masterminds of a sophisticated, meticulously organized scam. Several insiders, such as Carolyn Ellison, the CEO of Alameda, and Gary Wang, co-founder of FTX, confessed to their crimes and cooperated with the investigation, making them state witnesses. During the widely reported trial in late 2023, shocking details emerged, including the reckless use of client funds, loans made behind closed doors, and egregious mismanagement of assets valued at billions of dollars. In March 2024, Sam Bankman-Fried was sentenced to 25 years in federal prison. His sharp fall from grace was now complete. After being praised as a crypto poster child for his kindness and intelligence, he became well known for being the architect of one of the biggest financial scams in modern history. 6. The devastating ripple effects of the crypto industry. The implosion of FTX has a chilling effect on the entire cryptocurrency environment. The contagion spread quickly as companies with financial ties to FTX began to crumble. BlockFi, a major cryptocurrency lender, filed for bankruptcy just a few weeks later. Other businesses followed suit, including Genesis and Voyager. Bitcoin and Ethereum lost ground as the value of cryptocurrencies declined as investor confidence evaporated. The damage to the industry's image was significant, especially for one that was already struggling to shake its reputation for instability, fraud, and speculation. International regulators who had been hesitant to intervene too soon felt compelled to do so. The United States began to speed up new crypto laws as Europe and Asia strengthened their rules on exchanges and custodians. As big banks and hedge funds reassessed their commitment to digital assets, institutional adoption sharply declined after a spike in 2021 and 2022. Even retail investors who had previously been fierce proponents of cryptocurrencies began to back off. The FTX scandal not only destroyed one company but also severely damaged the standing of an entire economic sector that prided itself on innovation, decentralization, and independence from traditional banking. The cryptocurrency industry is now facing a significant turning point. In light of the challenging lessons learned, transparency, accountability, and responsible innovation must be prioritized going forward. If embraced, these concepts can help rebuild trust and guide cryptocurrencies toward a more stable and secure future where trust is earned rather than assumed. Let us know in the comments what you think about how Sam Bankman-Fried's FTX scam shook the crypto world, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.